Morning, everybody. It's the 30th of April. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate. All right?
Yeah, happy Friday to you.
Yes, and you?
Sun is shining. Bank holiday weekend ahead.
Oh, yeah, I keep forgetting about that, actually.
What's the weather looking like? I don't think it's looking too great,
No,
unfortunately.
no, it's the big storm coming in or something,
Oh, is
apparently.
there?
Yeah, bit rainstorm.
Oh,
Not good.
fuck.
Yeah.
I'm supposed to go and sea fishing on Monday.
Oh, are you?
Yeah,
Well, whatever way, you're going to get wet.
yeah. That might have to be postponed, looking at that weather forecast.
Yeah, I mean, that's not going to be enjoyable.
Oh no. Okay, right. Let's crack on then. So, corporate news first up. Twitter plunged 12% yesterday in after-hours trading after soft sales forecasts, and the firm fails to fully capitalize on the surge in advertising spending by online retailers. The platform is still managed to lift its active daily users by 20% to 199 million during the last quarter. That's even without the outbursts of US President Donald Trump to attract new members. I didn't think about that really. People just getting on Twitter just to follow what Trump was up to and his outbursts and rants, but I guess that would have had an impact.
Come back, Trump. All is forgiven.
Yeah, please, come on, we'll give you shares in Twitter. Elsewhere, Amazon's results, they were, as you would expect, pretty good. They've seen a bump up in e-commerce and their cloud servers, and obviously a jump in revenues as pandemic shopping and work habits persist. So the stock was up 2% in after-hours trading. In terms of metals, copper topped $10,000 a metric ton for the first time since 2011 on Thursday, nearing an all-time high as miners of base metal continue to push higher. Obviously struggling to keep up with demand in this economic rebound. I guess we'll come on to some charts of that shortly. You can give us your view on that, Stephen. Whether or not we're going to keep pushing higher. Boris Johnson still under pressure, under watchdog scrutiny as well. He's facing issues over wrongdoing about the redecoration of his flat or something. I can't even be bothered to read up about it.
You know
I'm so
what?
bored of it.
That story's been running for a while, and I actually can't even be bothered to drill down into the detail of it, which is not really, a great thing. We should really sort of.
I think we just all come to expect the fact that he's a lying, cheating, will do whatever he wants, and no one can stop him. Sort of.
Complete disclaimer there. That is Joe's own opinion. So if the Secret Service are watching, love it. Buffoon. I mean, I think you'll appreciate Buffoon. That's quite it's probably a sort of a step above the Darwin theory.
Okay, let's crack on with some charts then. Where should we start today, Steve? Anything interesting you want to talk about on commodities and indices, or should we dive into FX to start with?
Yeah, let's dive into FX, all these commodities and indices.
All right, cool. So dollar index first up, because we keep talking about this channel, which is very narrow and has been containing price action for a number of weeks now. But we did see some support found yesterday at the 78.6% fib level at 90.48. Seems to be doing a bit of a job, but today we are pushing higher, threatening to break above this short-term downtrend channel. Not getting too excited yet because we tried it here and it was an almighty fail. And led to a massive return to selling pressure. Last time we saw a little bit of a poke head or poking its head above the parapet. So interesting to keep an eye on that. But I do believe that if we can close higher today, probably above the high of yesterday's candle would be maybe enough to maybe trigger a corrective move to the upside in the dollar index. So watching and waiting on that. On the flip side, we've got euro dollar, which is looking pretty similar, but obviously in reverse. We've got this narrow channel, bit of selling yesterday, a bit of a doji just in front of this resistance level that we've got at 21.56. Trying to make an attempt at breaking lower today, very early in the session, and obviously lots can change. This is what happened last time. We tried to break below that level, and it was, again, another failure, and a big boost in buying was seen. So we'll wait and see if there is any further strength in euro dollar today, or whether this is the potential start of a corrective move to the downside. Looking at some of the riskier assets like Aussie yen, This looked like it was a breakout of a wedge and a continuation higher, but there were some pretty nasty looking reversal candles that have been formed in the last couple of sessions, notably this one where we saw a push to new highs, but then a close back to where we pretty much opened, looking like a bit of a reversal, and following that up today with a similar looking candle. I think if we get back below or into this wedge formation, then we could see more chop and potential move to the downside in the short term. If we look at Aussie dollar, not much happening there, pretty choppy to be totally honest, despite a bit of an uptick in dollar index today. Euro sterling, still an interesting one because I'm poised to take some action on this one on the long side if we can break above this neckline here at 87.19. We are very indecisive at the moment, and until we can break above that, we haven't confirmed this inverse head and shoulders pattern that I'm waiting on. Once we do, then I'll be looking for opportunities to buy that, targeting a move up to 89.66 over the short to medium term. What else? Dollar CAD still looking pretty sick, making new lows yesterday. Bit of stalling in that today, but obviously it's very early in the session and that could change. So we did see oil push to the upside yesterday, so that would have had a negative impact on this. Dollar Swiss pretty flat and boring, not a lot happening. Obviously corrected off of these recent highs, but maybe stalling around here. Dollar yen, I still think is the go-to if you want to play dollar strength. Obviously, you can buy the dollar index as well, but this for me is where it's at if you're looking for a bounce in the dollar. Decent uptrend in the short term, nice pullback to a 38.2% fib level, and some reversal candles in here and a continuation higher. So buying dips in dollar yen for me is the way to go in the short term. Pretty much wraps it up on anything I wanted to talk about on FX. So Steve, I can throw it over to you and you can give us your views on what's going on that front.
Yeah, what I'll do is I'll start with copper because obviously Joe mentioned it approaching its all-time highs. Now, this is a weekly chart we drew yonks ago. Great word, yonks. And we highlighted this double bottom formation on the long-term chart, on the weekly chart. So the neckline we talked about, and that was only in November, end of November, the break of the neckline, which then had a measured move target of the all-time high, and that has played out really, really nicely. As you see, we're still there's been no real pullback in this this daddy, and yeah, that's the channel. No sign of it breaking. We've even
pretty narrow, isn't it? I mean, if that does break, it could come off pretty quickly. You would have thought.
Well, yeah. I mean, obviously it's a weekly chart, so yeah, you sort of like it is a narrow channel. It's sort of like quite a steady move. I mean, you can't no denying it. Fantastic to sort of like from a technical point of view, that's sort of done everything it needed to do. If you looked at the daily chart as well, you would have had. I mean, this is a futures chart, so unfortunately, it sort of like won't show it very clearly. But if we take that extension out there, just that break of that line from a triangle formation, sort of again, it sort of gives a sort of like measured move of sort of that sort of break is like that again, pointing towards them all-time highs. So the signs were on the door from a technical perspective, and obviously we talked about how copper's been a real important factor as China expanded and opened up while everything else was closed. So that's enough of that. On to oil. Oil's again targeting a weekly chart. We got the measured move target on oil up around about the $68 level. That's the long-term chart. That's the ABC correction. And again, look at these sort of like bullish hammer here, almost a bullish hammer. Wouldn't really count as a bullish hammer, but really sort of this bottoming type of formation. And we've had sort of a couple of decent weeks leading into this week. I went short on the gun to head challenge, got my ass handed to me, but I am looking at this 4-hour chart because I've sort of highlighted the levels that I'm really interested in. And although we've got this the momentum stalling, it seems to sort of be biting back. We've had the breakthrough, the neckline of this double bottom formation, which is within the trend, so not classic, but that would lead to we've had the breakthrough and we've had a pullback, so a throwback to the neckline, where potentially I think could be worth a buy today. So I might be reversing what my thoughts were from yesterday. Gold had a bit of a up down day yesterday and managed to hit a new low from recent weeks of 1756. I was long on that yesterday and got stopped out at 1758, I think. And so again, looks like it could get a nice reaction again higher from there. So expecting after the support held, we expect another move back up in gold. Dollar still has had a little bit of a pullback, but not convincing to me. Indices. Yeah, what's going on in the indices? We have this corrective channel which seems to have stalled, hanging man candle and reversal, so almost like an evening hanging man reversal formation on FTSE, although in the last few hours we've seen a positive move to the upside. On the DAX, we're still contemplating a head and shoulders formation, and obviously we're still around the all-time highs in the Dow Jones. I really sort of like Monday, I want to take a look at economic cycles, especially with this surge in commodities. We can take a look at the cycles and which asset classes really work with those cycles. And maybe it's hinting towards, we've had this sort of expansion or expansive sort of moves in assets, especially in the equities and the commodities. And then the next part of the cycle after that is a slowdown. And it goes back to what we were talking about last year when we were talking about in lockdown. We expected, you know, after the real sell-off in March, April last year, we expected that to continue. But we've had this, you know, unbelievable rally higher in indices and commodities. And maybe we're, you know, as we open up or as the economy opens up, obviously India is really having a tough time. But as the rest of the world opens up and gets on top of the virus, then maybe that's when we're going to have the sort of pullback. And, you know, all these sort of valuations that we see in the indices, they're all based on, you know, the future revenues, future growth. And we're starting to see, you know, obviously evidence from Twitter. You've got 200 million active users every day. And that's sort of like, you know, had quite a knock yesterday. So maybe it's not all it's made up to be, these FANG stocks. Who knows? Don't know what the catalyst will be, but
we've been talking about it for ages, and it's
yeah,
not.
we have. It does feel a little bit like technical analysis, history repeating itself, cycles, everything like that. It all works.
Yeah.
So yeah, we'll try and sort of like bring that sort of like news and data as quick as we can to you, and sort of like keep highlighting these areas to watch.
Yeah. Cool. Okay, thank you, Steve. So going to the head trade from yesterday, we both made a call and we had one flat trade. I mean, literally closed at exactly the same level that it was opened. That was on dollar yen. And Steve, you stopped on your oil trade, as you mentioned earlier. So back on the horse today. Obviously, we've got a long weekend. So we won't be doing this again until Tuesday, but hopefully we can end the week on a positive footing. Anything you fancy this morning, or do you want me to have a go?
Yeah, I'm ready to sort of go on oil.
So we're going the same markets as we did yesterday.
Yeah, I'm going to do the reverse that I did yesterday. Again, I'm going to have a pretty tight stop because I want to sort of like land a big one. And so I'm going to get long of oil at 64.38. Is that being a bit too punchy? let's go 63.98 as a stop. That's below the round psychological figure of $64, and yeah, targeting a move to this next resistance line, 66.38. I like this one. 5-1.
Ooh.
Not as punchy as yesterday's 7-1 shot. This is a 5-1 shot. So
okay.
Bear that in mind. Obviously, I'm not telling anyone to trade this. I wouldn't touch it with a barge pole, but that's my view on a good potential risk reward trade today.
You've got a gun to your head and you've got to make a call. And
Yeah,
that's
I
the one
know.
you're making.
It's horrendous. What a terrible time.
Right, I'm going dollar yen again. As I mentioned, I quite like this as a dollar long play. I think there's maybe some legs in a dollar breakout to the upside from this channel. Certainly seems to be picking up a bit of steam. I think if we can close above the highs of yesterday at 90.79, then I'd be a little bit more enthused about the potential setup here. So dollar yen is my favoured pick to play the dollar, just because yen is so weak. And we've got a nice little chart set up here on the daily. Looking on the intraday basis, over the last hour, we have posted a nice looking green candle. So looking for a continuation higher on that one. So this is the hourly chart. Buying at 108.89, which is exactly the same level that I bought it and got it closed out at yesterday. Trying it again today, targeting 109.60. Stop loss at 108.68. So looking for 3.45 R on that trade today.
Nice one.
We shall see. Okay, so what we got today? Where's my calendar gone? Here we go. So, have we got any earnings today? Exxon Mobil and Chevron, so quite a heavy oil focus on the US side of things, shifting the focus away from tech. In terms of economic data, we've got Eurozone CPI and Eurozone GDP both out at 10 a.m. this morning, so keep an eye on your Euro crosses if you've got any exposure there. At 1:30, we've got US personal income and spending. At 2:45, we've got Chicago PMI. And at 3 p.m, we have US Michigan consumer confidence. So quite a lot to keep us interested today. So be careful if you're trading going into this long weekend. Is Europe closed on Monday as well? Is it just us? Do we know?
Not sure. Not sure
Okay.
what our neighbours are doing. I have got a little chart just wanted to show, and this is sourced from PIMCO. And this shows the late stages of the business cycle, and that as it says, it tends to be positive for commodities. So this is what we saw last year, the sort of like the recovery. Equities, obviously equities went negative last March when the coronavirus really hit. Commodities went negative. Bonds, it's the sort of jury's out on bonds. It's the interest rate predicament is sort of like obviously tied into there quite on a correlation basis, but interest rates for me are sort of a little bit different now. It's just
where are we on that, do you think? I mean, looking at bonds, it's negative, so you'd have to say we're in expansion.
Exactly. Yeah, we're in expansion, but are we sort of here in
teetering
expansion?
over to slow down?
Teetering over to slow down when equities go negative, bonds go negative, and commodities stay positive, or are we rising? Sort of? Are we? It's sort of, is this going to be a really quick slowdown? So slow down straight into recession.
Well, all the cycles are quick these days, aren't they?
They are. They're a lot
very
quicker.
long.
Yeah, they're. I mean, everything happens so much faster. You sort of like try and predict sort of like these sort of big moves in markets, and they're happening within sort of days because everything's so correlated nowadays. The pricing of everything is so tied in. And so it's just like a Catherine wheel. That's what it almost feels like.
Send me a screenshot of that.
Yeah, of course. Yeah,
I'm gonna have a play around with that. Try and come up with a model.
Yeah, definitely. Why not?
Yeah. Okay. Right. Cool. Thanks, Steve. Okay. Anything else, or shall we wrap it up there?
No, let's wrap it up there. And everyone, hopefully, I hope you all have a good weekend. Hope the weather's not as bad as it says it is, and we'll see you on Tuesday.
Yes, lovely indeed. Okay, mate. Have a good one. And
And you.
yeah, as Steve says, see you all Tuesday.
Cheers.
Cheers, then. Bye.
Bye.